Miss Lynette Zang from ITMtrading.com. Welcome back.
Oh, I'm happy to be here, David. We've known each other for a very long time now.
Yeah, but I still need your guidance, and I think a lot of people do. It just doesn't
Mm.
end with the policy mistakes. Now, I'm going to bolster up my gold holdings for sure. I'm going to go to itmtrading.com. I'm
Yes.
going to get some silver, the Eagles, and all of them. Yeah, 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 yeah. You always have
Silver,
some at the ready.
gold. I do. Yes, I do.
And ITM Trading is the place to go to get it. And we'll put the phone number right on the screen to make it easy for everybody. So, what kind of mistake this time is the Federal Reserve gonna make? Because I'm gonna put this out before he makes that mistake. What is your prediction?
Well, here's the thing. No matter what J Pal does, it's going to be a mistake because over time they have positioned themselves where they're darned if they do and they're darned if they don't.
Mm.
But at this point, all central banks, J-PAL and also the Bank of England. I mean, I don't think, and Christine Lagarde, they have given away, I think it was August when they gave away their credibility by promising a half a basis point or 50 basis point move and then doing a 75. And the market said, okay, we can't trust them now. So now they're fighting to get their credibility back. And in fighting to get their credibility back, it's kind of like a drowning man. And if you jump in to try and save them, you're all going down. So they are really, excuse me, hell bent on continuously raising rates at a pretty rapid rate until something breaks.
Hmm.
The problem is it's already broken.
Yeah. Something is going to break, and I don't know where it's going to start. I see housing, home prices rolling over, uh,
Mm-hmm.
echoes of 2008, 2009, that kind of thing. I'm seeing yield curve inversions, multiple. Uh, I'm seeing stocks starting to waver. It's like a rotation. Like the Dow gained 14% in October, but then the Nasdaq is, I saw these horrendous earnings with, Google
Right.
and Facebook or Meta platforms and Amazon. I mean, what is the collapse going to look like? Is everything going to go down? And I hope it's not going to take gold with it.
Well, there's spot gold, which is a contract, which is easy to manipulate and cheap, and then there's the physical gold market, and we're I well, okay, we can just go there, but I want to go back to something that you said about all the Meta and Amazon as well. But what we're seeing in the physical markets is that there's been a price decoupling. So we're seeing premiums in the physical silver and in the gold arena, even as we're seeing the declines in the spot market, though those declines are minimal compared, especially since first of the year, as compared to the stock markets and the bond markets. But that's because it's a paper market, right?
Hmm.
And in the paper market, they can create as much gold and silver that do not nor ever will exist. And in that way, manipulate the visible price that we see in the paper markets. In the physical markets, that's a pure supply and demand market. And like in China, their premiums are the highest that they've been at least since 2017, which was as far back as the graph that I got my hands on for that.
Hmm.
So they're paying like 35 bucks or 45 bucks for above the global spot because they can't fill demand fast enough.
Yeah.
So there's two very different markets that we're talking about. And if I can kind of backtrack to what you were talking about with Meta and Google and all of those guys, the
Amazon, all
big
those, yeah.
techs, yep, all the big techies. What's been happening with them on the way up and on the way, and now again on the way out is hurting. So you have all of these ETFs and all of these mutual funds that they're all buying just those big tech names. And so it's great on the way up because it made those prices move up faster. But now what's happening is the same thing on the way down as people are starting to get nervous when they open up their statements and they're starting to sell more. So, what do I think it's going to look like? Well, I think it's going to look, faster declines than what we're already seeing. But what has me particularly concerned is the loss of liquidity in the treasury market, in this
Mm,
specifically even the 10-year treasury market, because that's the foundation of all these global markets.
interesting. Okay. Yeah.
Have you been, I mean, basically, they're talking about a lot, and Treasury Secretary Janet Yellen is probably going to be buying back treasuries before
Mm,
too long,
yeah.
because all of the buyers are pulling back. The big buyers, like the pension funds, foreign entities, the central bank, the Federal Reserve, right? So all of those entities, the banks that used to support that market and keep it up there, they're not buying. So who's going to buy? Who's going to be the buyer of last resort when you have this narrow and more shrinking base of buyers?
Mm, okay.
It's going to be the Treasury.
So
They're going to
it'll
have
almost,
to.
yeah, wow, it'll almost be like a pump and dump from penny stocks when there are no
Mm-hmm.
buyers yet and everybody's rushing for the exits at once. Except this time it won't be a penny stock; it'll be the bond market,
Well,
which yeah.
bigger than the bond market. I mean, it's like building your house on quicksand
Hmm.
because it keeps shifting because of that lack of liquidity. And liquidity, just for viewers, I mean, I'm sure that they know that, so forgive me for being redundant. But liquidity is the ability to buy and sell easily without a lot of price action, right? Without a lot of price changes.
Right.
And you're not really seeing that in any markets, but even those traders and those that deal in the treasury markets are saying they can't go in and just sell a large block, because that's going to negatively impact the price that they're getting for it. So they have to cut up, if they whatever they want to liquidate, they have to cut it up into small pieces in order to be able to sell it and not have a major impact on the market. That's not good
Hmm.
in what's supposed to be the largest and most liquid, and a big, huge reason why the US retained its status as the world reserve currency.
Hmm. It's interesting. These are problems you only hear about in the paper markets or really digital
Right.
markets. You don't have to worry about that if you're holding tangible assets such as gold, silver. Liquidity has never been a problem with them. Thousands of
Exactly.
years of history. So that's why you got to have some. Yeah,
Well,
yeah,
and that's, when you're going into this battle, what do you want? You want the broadest base of buyer or the narrowest base of buyer?
yeah.
Because as we're seeing in the treasury market, those buyers are going away. Then you have no buyers, and therefore you have no market, and therefore the market freezes. But when you're looking at gold and silver, it's used across every single sector of the global economy. So it's used in finance, it's used in art, it's used in food, it's used in medicine, it's used in cosmetics, it's used in space travel, laptops, cameras, iPhones. I
Hmm.
mean, it's the broadest base of buyer, and you never hear anybody talk about it, but it is so significant.
Yeah. Absolutely. Just want to give the phone number. I'll put it on the screen as well. 888-696-4653. You got to call it. Speak to somebody at ITM Trading or just go to the website itmtrading.com. Links in the description below this video because you want to get your gold and silver before the price goes back up. Although some people are frustrated, especially with gold in the 1600s. It's a wonderful opportunity, but also a little bit frustrating. What do you want to say to people who've been holding gold and it just can't seem to get above 2,000? What's going on?
Well, what's going on is a rising gold price is an indication of a failing currency.
Hmm.
Does the government and the central banks actually want you to understand that the currency's valuation, and certainly that's what this high inflation does, it shows the devaluation of the currency. Do they really want you to understand that we're headed near zero?
Hmm.
Did they want you to know that the next step is hyperinflation? No, they don't, because they want you to keep your wealth in the system. Because then when it goes down, who are you going to call? Who are you going to complain to?
Yeah.
It won't matter. So that's why understanding that the spot market is a contract market, whereas in the physical market, it's different, right? Because of all of the uses, it has a lot of demand. So historically, in a normal, in a real supply demand market, yeah, depending upon what's going on, the valuation will go up and down and up and down, but never does it go to zero. This is definitely not a real market
Hmm.
because they'd rather have you buy cryptos. They'd rather have you stay in stocks and bonds. They'd rather have your wealth held inside of any kind of account where the banks actually get to use your equity for trading,
Hmm. Hmm.
right? They
Yeah.
can't do that when you pull it out and you put it in the physical market. They can't do that. So and plus, they don't want you to be able to protect yourself from their theft. And they don't
Yeah.
even want you to realize that they're the ones that's propagating this theft. They want you to blame the markets or point fingers at everywhere other than looking at the central bank that created this bubble and is now popping this bubble.
Yeah.
So when you talk about a policy misstep, quite honestly, they've been making so many policy missteps that they had the ability to make it, to cover it up with lots of QE, with lots of money printing for free, with lots more debt, lots more borrowing. But you know, because we've talked over so many years,
Hmm.
when 2008 hit, no doubt in my mind, and I said it then and I'll say it today, that's when the system really died and was put on that life support of a free money morphine drip.
Yeah.
And now they're trying to take that away and they can't do it. You
Right.
can't go cold turkey. They can't do it.
Yeah. Well, but there are people who are saying, but there's going to be a pause. There's going to be a pivot. The Fed is going to
Mm-hmm.
come in on a white horse. They're saying, maybe not tomorrow when the FOMC meeting for November happens, but December, early 2023, the white
Mm-hmm.
horse theory, and he's going to save us all. He's going to save the markets. What say you to that?
Well, I say that they are going to pivot because they only have this tool left.
That's great.
So they are going to pivot. But the problem is, if you look at what they did in 2008, which they took their balance sheet from about 800 billion to I think it was about 4 trillion, and they tried to run that balance sheet off, and they didn't get very far. They didn't get far raising rates. They didn't get far running that balance sheet off. And then by September of 2018, we're already entering another crisis mode. And
Hmm.
September of 2019, the money markets, so the plumbing of the global financial system was freezing, and they started QE. And then magically, or coincidentally, kind of depending upon your
Hmm.
perspective, things changed in March of 2020. And the level that they did of this
Hmm.
made what they did in 2008 look like chump change,
Yeah.
like nothing. So what do I think is going to happen? Yes, I think that they're going to pivot after they are clear that they have broken something big.
Hmm.
If it's the treasury market, it won't matter how much of that they do. It's not going to make any difference. And I wonder,
Yeah.
this
Yeah.
is what I'm wondering. You know, they've got to shift the benchmark interest rate from LIBOR to, in this country, SOFR, but globally, the interest rate benchmark against which over $610 trillion in notional value contracts are written
Hmm.
has to shift. And they postponed it. It was supposed to happen in 2021. They ran a test of 80 trillion in 2019 October. It went dead silent, and then 3 weeks later they came out and postponed this transition to 2023. They could not get the market participation that they were looking for because the two rates behave differently, which means that the valuation of all of those contracts against which these interest rates are written changes.
Hmm.
So they created this little workaround. So it's so far plus whatever, but they're still different and they still behave differently. So the market did not want to pick it up and start using it. But that was actually forced as of January of this year. So we have all those 600 to however many trillions of dollars worth of contracts that were written before. They changed the laws. They put in safe harbor, primarily according to the central banks. They put in safe harbor so that consumers couldn't file lawsuits, right?
Hmm.
So consumers are, you're going to open your statement one day, you're going to think, $100, and who knows, you might open it up and 5,000, and you're going like, what? And you have no recourse, right? You have absolutely zero recourse. So they've been busy changing the laws, putting in all of these things, but this is supposed to take place by June 30th of 2023.
Hmm.
And so, what I'm wondering is if all the volatility that we're seeing this year and then going into 2023, if they don't need a big enough crisis because they know they can't make this transition.
Hmm. Okay.
I don't know.
Yeah.
That is my speculation because of everything that I follow, and I know they can't do it. I'm not saying they can't do it. They can't do it successfully.
Right.
They can't pull it off and have it be invisible.
Right. Right. Interesting.
That's what I'm
Oh
saying.
man. So I'm actually thinking about getting more into allocating more into silver than gold right now for a couple reasons. First, the gold silver ratio is in the 80s. Over the last 20 years, the median was 60, I believe, for the gold to silver ratio. Also, I believe that countries, nations, continents are going to need more electric vehicles and lithium batteries, but also silver for batteries for electric vehicles
Mhm.
and other uses because of its conductivity, its malleability. So, do you recommend that a beginner investor start with silver more than gold? That's what I'm thinking right now.
No, and I'll tell you why. I own both, but rather than saying, when you talk about the silver gold ratio, to me, that's a trading vehicle, right?
Hmm.
So you think silver is going to go up and then I'm going to liquidate it. But in this environment, because this is a currency life cycle issue, and that means that the whole system, financial, social, and economic, is all shifting. And there will be a revaluation of this garbage, which has no intrinsic value, against gold, which is the primary currency metal. And when they do those overnight revaluations, they do it against gold.
Hmm.
And I've done studies, so you need both,
Yeah.
but I've done studies on the performance of both gold and silver through a hyperinflationary event like we're coming up to. And for a while, you're going to be right where you're going to see that gold silver ratio narrow. But once you get to a certain level inside of that trend, then gold severely outperforms silver. And it's primarily because that's what they do the revaluation against.
Yeah.
So if you look in now, Venezuela has done three overnight revaluations. And if you look at what they did, off the top of my head, so please forgive me if I'm not being 100% accurate, but you saw gold go up over 3,500 times.
Mm.
And that because the currency, they revalued it down by like 99.5%.
Yeah.
So for me personally, silver is about barterability. And what you really want to have the ability to do is to sustain your current standard of living as much as possible. So if you want to put gas in your car, or if you need to go and buy strawberries and you're not growing them, then that's what you're going to use silver for.
Mm.
But gold has a different function, and there's fractional. So there's all different kinds of silver and all different kinds of gold. But I have personally, I think that it's probably going to take, I don't know, maybe 10 years to work through all of this mess. So I have enough barterable silver, so that means silver in all different sizes, to meet my plus my two daughters' current living standards. And so I have a lot of silver, but not because of the gold silver ratio. Because let me tell you, when you get silver at 600 or $5,000 an ounce,
Mm.
you are not going to
Yeah.
want to trade it for that 5,000 unless you're going to convert it into a strawberry or something else
Right.
that you need on a
Right.
day-to-day basis. So that ratio doesn't mean anything. But with gold, the fractional gold coins for me are for like property taxes, because everybody's taxes are going up.
Yep.
So it'll protect you from, it's about property taxes. If you have any chronic health issues, things like that. Plus, then you have this kind of gold, which you can see is slabbed and it's collectible. Personally, I don't buy any bullion because I think there is likely to be, at least historically, this has been true in America as well as other places. I think they're going to do an overt confiscation. Price manipulation is a covert confiscation, by the way, no
Mm.
matter how you want to call it.
Yeah.
Um, but when they do that revaluation, what's happening, like we're talking about real estate, when that bubble pops, historically, you see like residential real estate drop maybe 85% from the high, commercial 95% from the high. So what happens is you've got real estate prices that go like that at the same time that the gold prices are going like that.
Mm.
So then you take this and you convert it into those income producing assets. So it's for growth, it's for absolute insurance and protection, as well as barterability. So I just attribute a lot more functions to gold, because in order to buy a building, I would need maybe a room full of this,
Mm.
but I could do this with maybe a coin, maybe two, maybe, fractional, because they revalue against this, not the silver.
Yeah. I'm gonna have to
That makes
rethink a number
sense.
of things. Maybe I shouldn't obsess over the gold to silver ratio so much.
I,
Yeah.
I don't care. And I don't care about pricing either,
Yeah.
because 100%, David, I know that Wall Street's prices do not reflect the true fundamental value of an ounce of gold or an ounce of silver. I
Right.
know that because it's easy enough to do the math. You just take all the debt that's been created, because see, gold is good money. This is fiat money. So it's the same coin, but it's the opposite side,
Mm.
right?
Yeah.
So if you want to know what this is really worth, then you take all of the debt that's been created. You can make your life easy and go to the debt clock and use that number,
Mm.
even though that's not everything, but you could use that. And with gold, there is a finite amount of it, plus it, you can't destroy it. It's indestructible. So you just divide all the debt by all the gold, and the Department of the Interior even pulls up all the gold that's still in the ground. And then that will get you somewhere near the true value of an ounce of gold, which somewhere is north of 15 grand.
Yeah.
So it's 1600. It's on sale.
Yeah. Oh, for sure.
Central banks are buying it. Why aren't you?
Yeah. Yeah.
You know what I mean?
True. True. Ratios don't matter in the end. If you honestly, if you buy gold at 1,600, 1,700, 2,000, 3,000, just hold it. If you buy the silver at whatever. If you buy silver at 18, 20, 25, 30, you'll still be fine. You'll be more than fine
Exactly.
over time.
Exactly.
Yeah, yeah.
Exactly.
And finally, I am convinced that if the fallout from the invasion of Ukraine doesn't collapse first Europe, their economy,
Mhm.
and then
Oh yeah.
contagion to other nations, including our
Oh
own
yeah.
United States, if that doesn't do it, then I'm convinced that China will invade Taiwan at some point. Just my
Yeah, I
opinion. I
think
see you
so
nodding your
too.
head.
Yeah.
It's not in the headlines lately. I don't know why.
Well,
It's amazing to me.
look
What?
over here.
Yeah.
It's
it's
misdirection.
Yep. You have to go to the alternative media like this channel you're watching right now to get this kind of information, or to Lynette Zang's and ITM Trading's Twitter accounts and videos and all that. And I'll put links to everything, of course. So when that kind of geopolitical event happens, one or the other or both, what happens to tangible asset prices? I mean, is it going to be like when I imagine gold could possibly go down briefly, but then like way up? I don't know what's
Well,
likely.
anything could happen. First of all, I agree with you on the spot market. We've been trained to look at the spot market and call that gold. It's not gold, it is a contract. According to the Bank for International Settlements, physical gold is the only financial asset that runs no counterparty risk. So, yes, you will see, just like you're seeing now, you will see spot drop, but those premiums will be exploding as
Yeah,
they are right now. I mean, you can't buy silver near spot. Now I don't work in that area, so I could be off on this, but I think you're having to pay just for a basic, well, silver piece dollar or something like that, something about $30 when you've got spot at what, like 18 something,
yeah,
right?
hmm.
So the premiums in the physical market will explode because that's already happening.
Yeah,
Okay.
yeah,
And, the big concern in the EU is fragmentation. In other words, the pegged union of the common currency that is supposed to kind of look like a common economy when everybody knows Germany's economy is different than Italy's economy, et cetera. So the big concern with the EU is the that experiment falling apart, which frankly, anytime historically that's been attempted, no peg lasts forever. So it
yeah,
was in my opinion, it was an absolutely failed experiment to begin with.
hmm.
And yeah, imagine if the EU falls apart, what kind of impact would that have globally?
Hmm.
So, and I agree with you too. I mean, China, it's been kind of quiet, but you know, I mean, kind of poked that bear because China considers that they own Taiwan, and we don't agree.
Hmm.
So, I mean, are we going to end up with World War III? And might we end up with World War III to prevent a global revolution,
Hmm.
which would be easier for them to control? A global revolution? I mean, we were headed in that direction in 2019.
Yeah,
Look at all of the riots that were happening all over the world and sympathetic riots. And then, COVID, boom. I mean, look at Hong Kong. I mean, they were really pushing for democracy, and that does not exist anymore. Thank you very much. How convenient. Uh, but now that's rising again. And you look at some place like Sri Lanka, where the population, the community took over the government and forced elections. And
hmm.
that's the biggest fear that these guys have, is that loss of confidence and the community coming together and forcing them out. And I think that's what we're going to see. Even Ray Dalio, he agrees. He says the same thing.
Yeah. And he
Global
says
revolution.
cash is trash, and he's been right. And you've been saying the same thing all along, and there you go. Yep. That's all I need to see, and you got to believe Miss Lynette Zang. She means what she says, and she does not play, and I like that. We need that. Oh man, you need to go to itmtrading.com and get yourself some gold, get some silver. I'm not gonna obsess over ratios anymore. I'm gonna worry about my future, and I'm gonna hold what's real. So,
Yes, and what you really need to do, and more than anything, this is what makes us different. Because I've been studying currencies and currency life cycles since 1987. And there are just, it's so simple. There are the same patterns that happen over and over and over again. And they are definitely, all those patterns are manifesting right now.
yeah,
And so when you come to us, it isn't just buy your gold and silver, because how do you know what to buy? What you need to think about is, what are you trying to accomplish? I want to sustain my standard of living. I want to grow my wealth base and position into income producing assets. I want to leave a legacy for my family to
mm-hmm.
make sure that they're okay. And then you talk to one of our consultants, because I developed a strategy for myself before I even went to ITM in 2002. And so we have a strategy that we help you build for you based upon your goals and your circumstances.
Yeah.
And that's really the way you approach it. This is what I'm trying to accomplish. This is what I have to work with. And then we will help you build your own personal strategy and then get it executed as quickly as you can.
There you go. Yeah, talk to a representative before you talk to anybody else. 888-696-4653. Miss Zhang, you know what? I'm feeling a little better. I'm not so worried about tomorrow. It's going to be
Good.
all right. It's going to be okay.
It it is. Just make some positive steps and get your foundation of money, because this is a money issue. So you get that done. And then also food, water, energy
Yeah.
security, barterability, wealth preservation, community, and shelter. And we recently opened a new website and a new YouTube channel
Hmm.
called Beyond Gold and Silver. And that's where we talk about everything else.
Yeah.
So if this is something that is brand new to you, the goal is to meet you wherever you are. If you have no experience, we're going to help you look at all the different ways that you can fill that all in so that you can protect your family and meet those goals. If you're really experienced with it, well, come along and help us teach other people how to do that so that we can come together in community and be ready.
Excellent. Wow. Okay. Miss Lynette Zhang, informational and quite inspirational today. Thank you so much.
Oh,
I'm
thank
going
you.
to edit this right now, get it out ASAP so people can get that info and get prepared. Thank you so much once again. We'll do it again soon.
I hope so, David. You take care.